Coming up on Market to Market, the U.S. Senate begins floor debate of the next farm bill. A former Secretary of Agriculture says no to Big Brother's eye in the sky. And an uninvited guest wreaks havoc on the Mississippi River and its tributaries. These stories and market analysis with Darren Newsom and Don Rose. Next.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.
This is the Friday, June 15 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Dean Borg. Government reports this week revealed America's manufacturing sector, a key driver of economic growth, slowed dramatically in May. The Federal Reserve reporting Friday that U.S. factory output fell 0.4% last month. The correction was driven primarily by a 1.5% decline in auto production, reflecting that sector's first drop since November. Overall, industrial production, which includes mines and utilities, dipped 0.1% after posting a solid 1% rise in April. U.S. retail sales also dipped in May, posting their first back-to-back monthly decline in 2 years. But that also reflects falling gasoline prices, and the national average price of unleaded gasoline was just over $3.50 a gallon on Friday. That's down more than 40 cents from its peak in early April. Analysts say the European financial crisis and an economic slowdown in China are hampering U.S. exports of factory goods. And those concerns also are weighing heavily on commodity prices. And in addition to concerns beyond America's borders, rural America also faces uncertainties within. Farm bill discussions once again echoed through the halls of Congress this week. The farm legislation overhaul pushed by the White House as both a food and a jobs bill includes a multi-billion-dollar cut to direct farm payments in addition to a revamped crop insurance program.
Altogether, this is going to be the only bill that passes Congress that saves money this year, I'll bet. And that saving adds up to $23 billion, most of it coming from direct payments.
But farm state lawmakers face a stiff political headwind. Legislative gridlock in a presidential election year could prevent any bill, regardless of deficit reduction, from receiving bipartisan support. Many of the same party line concerns from previous farm bills were voiced on the Senate floor this week.
Under this reasoning, we ought to just increase the food stamp program 10 times. Why not? We're going to get more money back. Somehow it's going to create a stimulus, and it's going to bring in more money for the treasury and make the economy grow. Why don't we just pay for your clothes, pay for your shoes, pay for your housing? Why not?
As the Farm Bill crawls through tedious debate on the Senate floor, lawmakers have begun to propose hundreds of amendments to the omnibus spending package. One proposal from former USDA Secretary Mike Johanns sets its sights on the Environmental Protection Agency, or EPA. Senator Johanns' Farm Bill amendment would prevent EPA officials from conducting aerial surveillance of controlled animal feeding operations, a practice used in Nebraska and Iowa in recent years.
We found that it's very cost-effective, and it's also a very good way to see the enormity of those CAFOs that are really doing the right thing and don't really have a lot of problems. And we don't have to spend time then with our inspectors working with those. It allows us to really find those CAFOs that may need a little work and a little direction and invest our time and our energy in those CAFOs.
As Market to Market reported this spring, EPA officials met with Nebraska farmers in March to explain the aerial flyovers and calm privacy concerns.
In the majority of instances, you're taking photographs of someone's home in addition to a business facility. That's very different than some of the cases out there where you're taking photographs of just a chemical manufacturing plant. And so I think that that's a very broad interpretation of what privacy rights we have, especially from the government.
This is a commercial operation that's being photographed. So, I mean, we can argue about the case law, but EPA is on pretty solid legal ground so far as the ability to do this.
Have you actually litigated a case where a CAFO in their home on the property has been evaluated litigated as part of the case-by-case analysis to the privacy rights?
Well, no, it hasn't been litigated, but I guess we'd be looking for a case. But we're not focusing on the homes. We're focusing on the feedlot for a minute or two, and then we move on. So, to try to characterize it as though we're focusing on the home and invading privacy rights associated with activity in or around the curtilage of that home, I think that's a mischaracterization of what we're doing here.
Despite legal assurances from EPA, Senator Johanns claims his office has yet to receive proper explanation for the rural flyovers. In a statement this week, Johanns said farmers and ranchers don't trust EPA doing low-altitude surveillance flights over their operations. EPA's surveillance program only adds to the deficit of trust this closed-door agency has earned as of late. It's past time for Congress to put an end to EPA's use of aerial surveillance. It's unknown what effect, if any, EPA enforcement of Clean Water Act regulations will have on Farm Bill legislation. Farm state lawmakers insist full passage of the bill is still possible prior to fall elections. A study released this spring on aquatic invasive species revealed the impact of unwanted guests in America's Great Lakes. The report, commissioned by the Nature Conservancy, revealed Great Lakes states lose an estimated $50 million a year due to reduced demand for industries and tourism because of the invasive species. Those costs don't include losses in other industries. While numerous forms of invasive aquatic life threaten the Great Lakes, Asian carp garner the most headlines. Since the invaders only eat plankton, they compete with native species for food. But even as officials desperately try to eradicate the fish from America's rivers, some entrepreneurs envision a market. Josh Bittner explains.
During the summer, myriad outdoor opportunities are in full bloom across America. For boating enthusiasts, sunshine and rising temperatures present a chance to cut loose on the water. But for some Midwest mariners, the whir of a boat motor can cue a most unusual phenomenon. Asian carp, an invasive species capable of decimating native fish populations, have used the Mississippi River as a superhighway, threatening to infiltrate every nook and cranny of her tributaries. Bighead and silver, two of the 4 varieties of the Yangtze River natives, have become a major nuisance in the central U.S.
The silver carp are known for their ability to jump out of the water when they're spooked. Prop noise from a boat or even the hull noise of the boat splashing in the water can cause these fish to jump out of the water. It's a defense mechanism that the fish have to get away from danger. Folks have seen the videos of those fish jumping up into boats. People have been injured where a fish has jumped out of the water and crossed their path.
Imported to clean algae from Arkansas catfish farms in the 1970s, these malign fish, revered in Asian culture as symbols of hard work and perseverance, escaped, due to flooding, into nearby waterways, meandering into the Mississippi River. Over the years, their numbers have grown into a massive horde.
The carp are prolific breeders. One female can hatch up to 4 million eggs per year. They eat constantly. They can double their weight in a week. There aren't any natural predators that eat them when they're small because they grow too fast.
Ironically, silver carp pose their greatest threat to people during their smaller juvenile stage of development. Biologists assure the fish are no longer prone to jump once they weigh over 10 pounds. Their diet, however, is another matter.
So this is a silver carp. They get much bigger than this. They filter the water for zooplankton, which is a critical food link for most of our native fish.
The Illinois River has borne the brunt of Asian carp. The aquatic barbarians are now storming the gates of Lake Michigan via the Chicago Sanitary and Ship Canal, which connects the two bodies of water. Though the fish are known for spawning in rivers as opposed to lake environments, the federal government isn't willing to play that hunch. To tackle the issue nationwide, the Obama administration has appointed a carp czar of sorts in John Goss, former director of the Indiana Department of Natural Resources. Goss's own state has fielded similar threats in the Wabash River, which connects to Lake Erie. The centerpiece for deterrence is an electrical barrier in Chicago. A series of electrodes across the bottom of the canal send low-voltage electricity into the water. When fish approach the electrical field, they are repelled back downstream. Manufacturers and proponents insist the levels are safe for fish and humans, but standard warnings are in place.
The problem is you're not going to be able to engineer your way around a biological problem.
Along with a partner in Illinois, Dr. Timothy Leeds of Ames, Iowa, had hatched an early plan to stave off Asian carp before Illinois' recent financial woes.
We initially had a plant set up in Havana, Illinois, and it was more of a show and smell plant than anything else. Take the carp in, process them, convince your neighbors that it doesn't reek.
Originally earmarked in the Illinois legislature, funds vanished. Until this week, when state officials endorsed another plan to tackle the problem. Strengthening their resolve, Leeds and his associate are seeking private investors for a new plan, not necessarily in Illinois. Incidentally, the doctor's adopted home state of Iowa has begun to see its share of Asian carp within her borders.
We're constantly documenting the spread of Asian carp throughout the state. They're really prevalent in our larger river systems.
The record flooding in 2011 on the Missouri River, itself a Mississippi tributary, emboldened bighead and silver carp to venture into northwest Iowa, knocking on the door of Iowa's Great Lakes, a popular recreational destination. Practically a microcosm for the national struggle, the chain of 6 glacial lakes is connected to the Missouri via the Little Sioux River and Mill Creek at the Lower Gar Spillway. Asian carp were first landed in the lake chain in August 2011. A wave of stewardship promptly followed in their wake.
We basically raised $700,000 in about 3 months.
Fearing a ruined regional economy, citizens and local business owners petitioned the Iowa legislature to appropriate money for a blockade. When that fell victim to political gridlock, the Iowa Department of Natural Resources stepped up, allocating $300,000.
We don't think that these fish can reproduce in a natural lake. So if that's the only way for their numbers to increase is during these flood events, then putting some type of a barrier in place on the downstream side of the Iowa Great Lakes is one way that would prevent them from moving upstream.
I guess my thought on the electrical barrier is it's kind of like chicken soup. I'm not sure that it's going to help, but it certainly won't hurt.
Though viewed by many as a scourge, niche markets do exist for carp. Stoller Fisheries in nearby Spirit Lake, Iowa, has been processing freshwater rough fish since 1932.
We're something like a slaughterhouse for beef or cattle. They're reduced to the edible parts and the inedible parts. Most of it is mechanically deboned, so it looks like hamburger when it comes out. The product is very acceptable for making fish sticks, fish patties. Our primary customers are in the kosher industry. They're making a Jewish traditional product called gefilte fish.
Should bighead or silver carp gain a foothold in Iowa's Great Lakes, Stoller assures they are set up to handle an onslaught.
We are set up. In fact, we've been processing Asian carp from the Illinois area for probably 5 or 6 years. If there were fish in these lakes, we would process them, yes, but we're not welcoming them into the area.
On the positive side, silver carp and bighead carp are very good to eat. The common carp, they've been here since the 1880s. They're mucking up at the bottom. These don't. They're eating the same thing that really salmon eats.
What is the other choice for carp? In Asia, they eat 6 times as much fish as we do, and carp for them is a delicacy. If we could get the carp back to Asia, there's a major market for the fish there. The only thing that's ever been shown to help with carp is to overfish them. But you can't overfish them if you don't have an end market. So we're trying to create an end market from scratch.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
The downward trend in grain prices continued this week as the trade pondered the impact of the upcoming election Sunday in Greece. For the week, July wheat lost 20 cents, while the nearby corn contract moved 19 cents lower. Soybeans moved in step with the coarse grains as the July contract posted a weekly loss of 50 cents, while nearby meal prices declined by nearly $20 a ton. In the softs, cotton bucking the bearish trend as the December contract for cotton settled Friday with a weekly gain of $1.14 a hundredweight. In the dairy market, July Class 3 milk futures rallying 52 cents, while the August contract moved 33 cents higher. Over in livestock, the August fed cattle contract losing $4.17. Nearby feeders off by more than $3, and the August lean hog contract lost $1.25. In the currency markets, the euro gaining 138 basis points against the dollar. Crude oil trading sideways with a weekly loss of 6 cents a barrel. COMEX gold rallied more than $35 an ounce, and the Goldman Sachs Commodity Index lost nearly 5 points to settle at 582.10. Here now to lend us their insight on these and other trends are two of our regular market analysts, Darren Newsom and Don Rose. Gentlemen, welcome back.
Thank you. Thank you.
Well, you know, we hear this week from drought experts and the U.S. government's Drought Forecasting Center that we're in danger of more dry weather, and it's not looking any better, although there was some rain across portions of the Midwest this past week. But that doesn't seem to be reflected in the corn and soybean markets.
Well, you're right, Dean. You know, the market is not very respectful of the weather problems that we've had so far, and you have to ask yourself why. And probably part of the reason is we want to move to lower levels. And our crop ratings are severely under a year ago, but the market continues to move lower. And, you know, it's all about weather this time of year. And if we miss the moisture that we forecast on Friday, you know, Monday's going to be a very explosive day.
Darren, when do you think that the markets are going to be either factoring in the weather?
Yeah, you know, I think, you know, we're just not quite there yet where we've moved into a full-blown weather market. Mm-hmm. We're still dealing with this overall bearish view of commodities. You mentioned the Goldman Sachs index was down again today. Yeah. Now, gold did turn around. We're starting to see cotton turn around. So hit and miss, we're starting to see some commodities begin to react. But you know, the market, the sector in general seems to be struggling, and until we change that, until we actually get into this full-blown weather market, I don't think we're going to see it register.
And when the weather market, I mean, what more does it need?
I think we need to, well, number one, we're going to have to get investors interested. And so to do that, we're going to have to actually start to see talk of real damage being done to production numbers. You know, we had a USDA report out this last Tuesday, I believe, and, you know, new crop corn wasn't changed at all. Overall yield was left the same, overall production. In fact, all the corn numbers were left unchanged. So investors had no reason to get in, you know, to become interested in this market, no reason to be concerned, so they stay on the bear side.
Don, I've been talking corn and soybeans here, but let's include wheat now. Wheat, is that also affected because parts of the wheat growing area are dry too? But a note here from Janet in Chapin, Kansas, talking to, this past week, says they're done harvesting wheat and it's the earliest ever.
Yeah, you know, and I think the wheat's coming off very quickly. And, you know, I thought down south, you know, the yield, I think overall, it was a little bit disappointing from the lofty levels that we expected. But we're moving north on wheat harvest, and we've had some timely rains in some of the wheat areas there. But, you know, around the world, we still have abundant supplies of wheat. So, you know, we do have a buffer for a little bit of a yield loss, which is exactly what is happening.
Cotton, though, is not reflected there, bucking the trend.
Mm-hmm. Yeah, the cotton market in general it remains, you know, neutral to bearish if you want to look at its supply and demand situation. There's really nothing to light a fire into this market, but it's been beaten down so far. You know, we've seen some very high prices here coming off of 2008. In 2010, we made another run. Mm-hmm. But the market has just been blasted here over the last 6 months. So what we're starting to see is a little bit of money coming back into this market, possibly on the idea that it's overvalued, undersold, all these technical terms that investor traders will look at. This is what's starting to provide a little bit of support to cotton, maybe can get it rolling a bit.
And yet this week, you know, even with a decline in the corn market, we saw farmers selling corn. Of course, they're always selling corn, but really a lot of corn moving this week.
Well, I think we're going to find out. A big report's coming up June 29th. The stocks report, stocks and all positions in the acres. And I think the producer was just hit a time frame where he's starting to move stocks aggressively. But, Dean, when you look at the acres, I think there's a chance that the acres could be 500,000 to 1 million more on this report that's coming up June 29th. And the soybean acres could be up 2 to 3 million. So that's given us part of this buffer, when we're talking about why isn't the grain market bouncing in the weather issues.
And I might say, why isn't also it being reflected in the livestock markets?
Well, and that's a good question, because part of the issue with the livestock market is if the grain market moves lower, the livestock will also move lower in sympathy with the crush, and that's exactly what's happening. That's part of the reason with these lofty grain values why the livestock market is so lofty. So, this week we had a big setback on cash cattle with supplies growing and weights growing.
Mm-hmm. Okay. In the hog and cattle markets, what do you see there?
Well, the hog market's actually, Don mentioned, how the pressure that we've seen in the cash cattle market. It's opposite, it's the opposite story completely in the cash hogs. We've actually got a short supply situation. We've got packers really pushing this market. We had very strong cash markets. It looks like we want to stick with this for a little while. We've turned the trend of the cash market up. I think it's going to continue to pull the futures market as well. So, where the cattle industry looks bearish, at least for short term, looks like it's going to be quite bullish for hogs.
And feeder cattle?
Feeder cattle could continue to struggle. The overall break-even prices in the cattle market, I think, is going to help bring some of these feeder cattle prices down as well.
Is that the way you feel too, Don?
Yeah, I think when you look at the hog market, just a little bit different. We think that the 2013 supply side is going to be quite bearish. So we think this is very much a short-lived situation, that we think that there has to be, some risk management that should be implemented.
Are these at all being driven, the commodity markets, are they being driven by, we said earlier in the program, the election coming up in Greece and China's economy and so on? What do you think, Don?
Well, most definitely. I think, the dominant issue is weather, but right behind that is what's happening in the world economies. We just have huge debt loads around the world, and, we just can't seem to come to grips with them. So the elections Sunday night in Greece are going to be a big deal on how stable the markets are on the outside.
Well, how would that affect? I mean, what if there's a certain outcome there, what are you looking for?
Well, if it's a poor outlook, I think what happens is it's a risk-off type of trade, and if we happen to have some decent moisture at the same time, that's probably going to cause a lot of selling in the marketplace. But, right now the odds favor that they're going to have a positive election, Dean.
And China?
China's the big question, because that's, the number one demand market that there is. And right now, even though there's been talk of, slower growth in China, there's still growth. No one really knows for sure when and if they're going to ever step out of these markets. They're still a very active buyer in new crop soybeans. They've been an active buyer in wheat and other markets. So these headlines seem to come and go through the market very quickly about Chinese problems. But if we ever were to see a large-scale setback economically or a large slowdown in China, I think at first it would be reflected in these immediate markets of the energy complex and the soy complex, overall oilseed markets globally, and then spread over to the other commodities as well.
Let me ask, what are you advising people who call you now and ask about specific commodities? What are you advising them on corn?
In the corn market, as Don pointed out, we're going to have to be pretty careful with this market, because there are still so many question marks. I think long term, it's going to be real difficult to establish any sort of long-term rally unless we see a full-fledged weather market. So sell the rallies, make sure you're locking in good prices. New crop basis is still quite strong. I think you're going to want to look at trying to get some sales on soybeans. I think you could sit back a little bit. The market is indicating with its forward curve that we've still got a very bullish situation ahead of us.
Don, would you echo that on soybeans, for example?
Well, next week is a negative time frame seasonally, where this next week we usually come under a lot of pressure. But the soybeans have the best fundamentals, but we may have seen the most bullish report already out of soybeans, because remember, the next report you're probably going to have bigger acres. So, the soybeans are going to find support around $13 on November beans, and then quickly at $12.50. But, we think $12.50 to $12 should be a big support zone, but it's going to take a lot of weather problems, we think, to push us back up to the double top of $14 on November. Dean.
Would you advise people who are looking to add feeders to feedlots right now to be very careful because of the drought may drive corn prices higher?
Well, I think risk management is always key, but right now, actually, we think that the odds favor that we have normal rain patterns start to develop, and that the grain markets comes under some pressure. And we think it's not out of line to go to $4 to $4.50 on December corn, so we'd be careful with extending big coverage.
You said the odds favor that we're going to get rain?
The odds favor, from our standpoint, we're moving into that time of year. It seems odd, but we're moving into closer to a El Nino than a La Nina, so it does.
It looks like you're the eternal optimist. A lot of farmers like to hear that. What were you advising on hogs and cattle?
I think with this rally that we're seeing in the hog market, you might want to get some locked in. As Don said, 2013 certainly does look like it's a much more bearish situation. Cattle market, you're going to have to try to find the numbers that work out. The type of selling that we saw this week, if you get any kind of life in these markets at all, you can lock in some profits. Certainly do it. So I would treat both very cautiously. But right now, it seems like the hogs have the best chance of posting a run.
Don, are you advising people now with corn prices the way they are, soybean prices, to lock in future feed needs?
Well, I think you can in a selective manner. I would use the proper risk management tools because, if we are right and we do go into a more normal weather pattern, the odds favor with a big cushion that we continue to try and move lower rather than higher. But it's all up to weather, Dean.
Yeah. And on weather, if there is rain across the Midwest, at least a bit of it this week, and in fact on the weekend, is that at all enough to move markets?
It very well could be, because number one, it keeps the bears fed. I mean, it keeps the bears happy, and it doesn't give the bulls anything to start to build on. What we're seeing is next week, western half of the Corn Belt, western half of the Midwest, is supposed to stay has a good chance of rain. Eastern half could stay relatively dry. So it could be a battle forming there, but you're really going to have to build something solid for these bulls to get interested in it, or they're going to stay on the sidelines.
Good. Thanks so much. Darren Newsom, Don Rose, thanks. And that wraps up this edition of Market to Market. But if you'd like more information from Darren and Don on where these volatile markets may be headed, visit our Market Plus page at our website. You'll find expanded market analysis, audio podcast, streaming video of the program, and also links to our Twitter feed and Facebook page. It's all free at the Market to Market website. Many of you posted comments on those sites too last week expressing your condolences over the passing of our colleague Mark Pearson. We thank you for your support, and we want you to know that Market to Market will name a new host in the weeks ahead. And just as longtime viewers remember that Mark Pearson originally was known simply as Chet Randolph's successor, our next host of Market to Market will always be known as Mark's. So until next week, thanks for watching. I'm Dean Borg, and as Mark would say, have a good week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.